Hello everybody, this is Toni Turner and welcome to the market now as of Friday, March 17th, St. Patrick's Day at about 3:30 p.m. Eastern. Well, the stock market is weak today on this quadruple witching options expiration day. That's a mouthful. These kinds of quadruple witching expiration days are usually kind of volatile. Regional banks are under pressure again today after First Republic Bank suspended its dividend. The main indices have settled into narrow trading ranges near their lows of the day after the S&P 500 found some support earlier at the 3,900 level. We'll talk about that in a little bit. So on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the ETF that closely follows our benchmark S&P 500 index. Now you can see we've had a wild ride here for the past few weeks. And when I captured this chart today, the SPY was trading at $392.79. Or again, that would be about 39.27 on the S&P 500 itself. So we did find support here at 390, and we'll talk about that as we go. Now the SPY is now trading above 11% above the SPY's October lows that we've talked about before here that came in at 348. So if we want a bull market from a market's low, we want it to go up at least 20% above the last big low, and so far now we went up and then came back, so now we're only 11% above that low. Now from the benchmark lows down here at 348, the SPY climbed up, as you know, up. It made some bumpy moves, but it did climb up to November high and December high. Those were both at 410, and it did a double top here that we talked about, then fulfilled that double top by going, if we measured from here to here and picked that line up and moved it down, it would come to exactly there, exactly where the SPY did stop. And so it came down to 375, stopped there toward the end of December, and then sidestepped into the end of the year. It continued to consolidate for a few days into January, but then we had a very nice rally in January. And it's always good to have a positive January every year. It climbed back up over the 50-day moving average, the green line, back up over the 20-day line, the red line, even managed at a point here to rise up over the 200-day moving average. That black line is watched by a lot of market technicians, especially in the large firms. So when the SPY goes over, the 50-day is important. The 200-day is even more important. When it goes up over that line, then of course the outlook is more bullish. So it actually climbed up here on February 2nd. That was like the high for everybody almost. It climbed up to a high of 418. That was good. When it did that, you and I talked in Toni's In Market Now about the fact that the 14-day RSI was getting overbought. So that means it's too good to be true. We thought it might pull back a little bit. It's usually not a sharp move down when this happens, but it happens, and it happened here. So from February 2nd and that high at 418, it consolidated, then it started losing its mojo, came down here, fell through the 20-day moving average, continued to dip down here to fall through the 50-day moving average again, sat on the 200-day moving average real quick, moved up then had this doji up here, then fell down a week before last, pretty hard, fell below its moving averages down to 380. Now this is a new number, it's a new low, and it's a number you want to put where you can see. 380 is this most recent low, and that's an important support point. So it did rally this week. As you know, yesterday, Thursday, closed at 396, back above its 200-day moving average, not yet up to the 50-day, but at least above the 200. Then today, when we got more banking news that was negative this morning, then the SPY gap down to open and is now sitting, moved down to open and is now sitting at $389.90 below the 200-day moving average again. So next week, please know that we have the Fed announcing interest rates next Wednesday. That's going to be a very big deal. Everybody's looking at that. And we have a lot more going on with the regional banks and a lot of other things. So the SPY's challenge next week is to, if it can, if we want to remain bullish, it needs to climb back above this 200-day moving average. It would be nice if it could go above the 50-day. We'll have to see that. But the 200-day comes in here at $392.79. So just call it 393 if you don't have this on your chart. That's important. And it definitely needs to stay above this support low at 380. Okay, so above 380, hopefully above 393. And now we can go on to our next chart. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Now this looks a lot different than the SPY. Why is that? Because the Qs, as I call them, represents the top 100. Hear these words, non-financial companies. There are no banks in the QQQ. That's why it looks, that's one big reason that's why it looks so strong. We have the big caps in here like Apple, Amazon, Microsoft, Meta, Tesla, that whole group. And amazingly, they're holding up very well in this environment, especially the high interest rate environment, but we'll see next week what happens there. When I captured this chart today, the QQQ was trading at $304.91. That is 17% above its October low. So that's a nice number. Now, this is moving up pretty rapidly here. We'll have to see. We don't want it to move up quite like that because a durable uptrend goes at about a 45-degree angle. But anyway, we'll take it. So we know that at its October lows at 254, we know that it rallied up, came back down to try to retest those former lows, but didn't quite get there, which is good. That means buyers came in to grab it before it fell down to the prior low. Then it moved up, and in November and December, it moved up with a similar pattern to the SPY, and this one moved up to 297, then did the double top trick. Of course, that's a top reversal pattern, back down to consolidate at 259, 260 in this consolidation area right here, 259, 260. That's in December and then in January. Then in January it said, okay, tech stocks are back in, we need to buy them now. So we had a really pretty steep uptrend here. Remember I said enduring uptrends go at about a 45-degree angle. Well, this one went up pretty steeply. It flew up to $313.68 on February 2nd. Now, we talked in the market now about, see how the 14-day RSI came up here and over the 70 line. We said that when that happens, most stocks or assets, when the 14-day gets overbought, will back off a little at some point, and it certainly that exactly is what happened. And then it slipped back down here to, it came up here and then tried to stay but couldn't do it, came down here to these lows, down to 290 on the 2nd of March. Then it rallied again, came here to 290. Then it rallied again up. We hit a doji here. Then it fell back down. and below the 50-day moving average. This week it started back up, went over the green line, got even over the 20-day moving average, with the 200-day moving average down here at 290. So it looks good. This was a pretty steep move up this week that we've had. It did stop cold here today at $304.91, where it is trading right now. Now we can say this is, again, a stronger pattern, at least trading over the moving averages, than the SPY, again, because the Invesco QQQ is all non-financial companies. So, but nobody can be more active than momentum stocks when they want to be. So in the coming week, with everything we have going on, please remember that the Qs, two things, because it's going to make you a little hairy out there. Remember that right up here, today's high is right up above, probably about 309, but the high up here is more important. I don't know if I could draw a straight line or not. Evidently not here. Let's go. Anyway, it's 314. So if that's resistance at 314, this is support down here. At 285, this is support 285 and 314. So please remember that. You can also remember that the 200-day moving average is coming in at 290. We're going to round these off. So what we need to do, if the Qs need to bounce back and forth here, and undoubtedly that will happen, we just do want them finally to stay above 285, and we will recognize resistance at 314. Very important that the Q stays above 285. Please keep it simple, and please remember next week that cash is a perfectly valid position. Our final stock today, because I know traders always have to have something to look at. I am that person too. I know some people out there are going, Toni, let me buy now. Well, okay. I've got an urge here to kind of stand mostly on the sidelines next week, especially to get through the Fed announcement on Wednesday. However, I looked through many ETFs today. A lot of them, of course, do have negative price patterns. This is the Global X Social Media ETF, the SOCL. And you got to figure social media is one of the most popular online activities globally, no matter what's happening. So in this market environment, if you insist on staring something to maybe even buy, this is one option. The pattern itself is relatively orderly, and that's what I look for in all stocks and ETFs that I look at. I want orderly. Why orderly? Because it's easier for me to spot divergences and things that could go wrong in an orderly pattern than it is in one that's all over the place. So the Global X, when I captured this chart today, it was trading at $34.73, just barely below the 50-day moving average and just barely above, sitting on the 20-day moving average, with the 200-day moving average down below here at $32.16. We'll call it 32. Now, it did make a recent low in October of 2022, like everybody else. It made that low at $24.32 right here. It held for a little while here, consolidated. Then it jumped up, made a high in December at $32.62 up here, and then like most other stocks and ETFs, that pulled back toward the end of December, then consolidated, and it was above the 50-day moving average, and for the most part above the 20-day moving average, and moving higher in a pretty nice little uptrend here for a while. Nothing to write home about, but it's going up, and that's certainly a good thing, better than a lot of stocks or ETFs did. It ramped up pretty stronger in January, rallied to February 2nd high at $39.17 right here. So it rallied up to that point. February 2nd knocked almost everybody down, and it too. And look at how overbought it was. See how the 14-day RSI is poking above and over the 70 line on that scale. So you got to know when it's that overbought, in the short term at least, and you can't really say, but you know it's probably going to pull back. A lot of people holding long term don't care, but a lot of traders go, hey, maybe I'll take a little profits off the table here. And so it did start falling with everybody else, fell through the 20-day moving average, actually sunk down to below the 50-day moving average, then popped back up a little bit over 36, came back down, kind of in symphony with everybody else, and it came back down to 33. It's still above the 200-day moving average, which is coming in at $32, as I said before, 16 cents. So this is tech stocks. Some of the top holdings, I should have told you this before, include Meta, Spotify, Snap, NetEase, and Pinterest. So these are tech stocks. They're not the most volatile tech stocks out there, which is one reason I chose this. So in the coming week, if the SOCL, the social, can stay above the 200-day moving average here, call it 32 to make it easy. It's at 34.73 now. If it can stay above this 200-day moving average, which is coming in at 32, I may, and the operative word is may, because if the market's plunging for some reason, I'm not going to do it, but it may not. If social can stay above the 200-day moving average at 32, I may add a very small position to my trading portfolio with my stop down here below the 200-day moving average at $31.94. If and when, and this, don't know how long this will take, if and when the SOCL rises above 39, this was the last high, if you'll remember, I told you on February 2nd. If and when it can rise above 39 and close 3 consecutive closes above that level, I will add more shares to my position, and certainly by then my stop will be a trailing stop. So you might want to keep an eye on the SOCL in the coming week. So now, while the market is being a wild child, acting, if you'd like to become a more successful trader, this is the perfect time to take some time to check out my trader training programs. You can choose from 10 different online trainings, like our popular flagship product, 7 Steps to Successful Trading. We also tell you quickly and easily how you can swing trade, how to swing trade successfully, how you can trade the trend to profits, which is a great thing to do as soon as this market settles down. For novices, how to read charts. 3 winning setups is great. They're short-term trades. And when this is all calmed down, you do want to know how to bottom fish like a pro. That's probably the easiest thing to do, and a lot of times it's how you make the most money. So find out how to elevate your trading skill set and increase your gains quickly and easily. To see all of my online training programs, simply go to the link on the screen up here, right up here, or click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.